I may be a slow walker, but I never walk back. Abraham Lincoln. And of course, President Lincoln was telling us that he continued to push forward through thick and thin. When you read about Abraham Lincoln's life, you see over and over again that he was a man dedicated to persevering, to pushing forward to victory, no matter what the odds. Every single day, what do? 10 to 15 minutes, that's all we ask. Spend that time with us learning how to chart the markets. Practice trade all you can. We have video after video after video prepared and ready for you. Got a great one today, another new one. Do not allow the complexity of charting to scare you away. Great one. It explains our mindset. It explains how simple it is, what it is we're trying to do, the goal that we have. And think about it. All we are doing here every day is making a binary decision to get into a particular ETF or not in a practice trade. That's it. And once you're in, the decision is to stay in or get out. That's it. It's that simple. And we use the charts, graphical representations of price movement, to help us make those decisions. So let's jump into the charts. I want you to have that training. You need to be a subscriber at chartingwealth.com for free. Go there, sign up. Every day you'll get our daily reviews. You'll get the special free trainings, links to those. And then once a week, the comprehensive review and forecast, plus links to a discount on the charting software that we use, freestockcharts.com's paid version TC2000, a link to buy our book, Charting Your Way to Wealth, information on being a Patreon supporter, and all the great stuff that comes with that. We see that stocks are up for the day. Bonds and gold are down. The S&P 500 up 0.56% for the day. Looks like we're trying to cross over going up. It did not happen last week. We see that the charts are attempting to do that so far. First day of the latest 5-day candle pushing higher than the prior candle, both in its absolute top and in the candle itself. That's nice to see. Derivative oscillator going into its third week of up movement, third up candle. Now again, this is just the first day of the latest 2-day candle. First day of the latest weekly candle. This is actually the ending of this most recent candle representing Friday and Monday on the 2-day chart, pushing through the 2-day trend line. Price percent oscillator spiking up, derivative oscillator heading up, reaching a higher high, and the candle body substantially larger than the prior candle body. Things had really gone sideways for about 6 days or so, and then popping up on Monday. That is nice to see on the S&P 500. Go to the 4-hour chart. It crossed over going up back in the morning on Friday, and of course is now gone up for 2 days, up 0.56%. Prices above the 2-day trend line. The weekly is still confirmed down until that candle closes, and that won't happen until Friday. But my friends, no fears. We just didn't get enough energy to cross over. But guess what we did have? We had the Qs cross over Friday afternoon for you. That did occur. How many of you, we talked about it on Friday on that comprehensive review and forecast over the weekend, had a jumping in point at 355. Did you jump in? Did you wait for that? And when it happened, did you do it? Because things were up quite nicely, over 8% during the day. We see that price is above, and you know, one thing we did not do, I just noticed this, even though we did change our candle, we changed our trend, we showed the weekly vertical crossover, we didn't change the trend line, which we've done now. Now we've redrawn the weekly trend line. We can see that we have a nice strong weekly candle forming, pushing above the Bollinger Band. Price percent oscillator pulling away from the red signal line. Derivative oscillator gaining upward momentum. Third week of that. Third nice, decent up candle forming. You go to the 2-day chart, which of course finished drawing on Monday. Spiking up on the price percent oscillator. Higher high, much higher high. In fact, it's telling us the high during the day was 197.83. And of course, we had during not just the day, but during those 2 days. So again, nice highs being reached on the 2-day candle. Remember, it represents 2 days going up quite nicely. And of course, we look at that 4-hour chart. You can see that spike occurred in the morning, followed by even more up movement in the afternoon. Price percent oscillator gaining momentum. Derivative oscillator heading up also. So quite nice. Now, what was our jumping in point? Again, we can go back to that. The jumping in point, as we have talked about with you guys, was at 355 on Friday. That jumping in point somewhere around the line of, well, the opening at 195.46. And again, reached a high throughout the day. We'll go back to our weekly chart, see what our high has been so far, the 197.83. So that's quite nice. Again, keep your eye on the prize. We just have this move starting. And again, pay attention. These charts, of course, in October have been all over the place. It is coming to an end, but we did have the weekly vertical crossover, and things are starting off the week at least nicely. Who knows what tomorrow brings? Again, use your loss limits. Keep those in mind for those of you that jumped into that trade along with the profits that you set on your good till canceled sell order when you entered your practice trade. Let's go to TLT, which is where our other trade is. And of course, that's moving along quite nicely going into the 3rd week of nice strong down movement. TLT down again, 0.91%. And again, going into that 3rd week, we got 3 down candles forming, derivative oscillator gaining momentum, price percent oscillator staying at the same down angle, which is nice to see. We go to the 2-hour chart, the 2-day chart, forgive me, and we see that spiking down even further, which is nice. We had things go sideways for a 2-day period there with that green doji, and now it's heading down even further. We go to the 4-hour chart, and of course it crossed over again, going down at in the morning on Monday and continued down even further. So again, we had that sideways slide, and then everything started dumping off again Friday morning, followed by more movement down on Monday morning. Those of you who wanted to jump back in after things crossed over, did you get in the early afternoon after that down move in the morning? Let's see how that continues to play out for you. Pay close attention. Have your loss limit set in your TBF practice trade. Remember, that's the inverse fund for TLT. It moves opposite. If you want to know more about how to use inverse funds to practice trade when things are going in opposite directions of the underlying asset, such as the Nasdaq 100, the S&P 500, or 20-year bonds, follow our training. We have it there on the website. It is, and you can find it also at our YouTube channel. You know what? I'll plug it in here with the training today. You'll see it listed at the end of this training. I'll have a link for inverse funds, how to make money when markets crash. I want you to practice trade those also. So next we go to gold. Gold down for the day, 0.86%, not quite as much as bonds. What do we see going on with gold? Well, gold has really been sliding sideways now, still going on as we look at the candles going into the 3rd week. However, derivative oscillator continuing to move down. Price percent oscillator rather continuing to move down. Derivative oscillator losing a little bit of downward momentum. Go to the 2-day chart. We can see that it's still negative. It moved a little bit over, more going down. Price percent oscillator did that. Derivative oscillator losing downward momentum. We look at our Heiken Ashi candlesticks. Of course, we've got a green up candle on that 2-day chart. Even with the down movement for the day, this represents, of course, 2 days of movement. We can see where things are still bound within that range where things started moving down back on the 10th, I guess. That's sort of where we topped last on Wednesday and Thursday, that 9th and 10th of October, and then sort of sideways. So we're all within that same flow. Do keep your eyes on things. We look at that 4-hour chart, and we can see that it hasn't crossed over for a jumping in point in gold again. Did move down, but it had really, really spiked up. So again, continue to keep your eye on things. Do be concerned about that 2-day chart. It does look awfully weird. Very, very strange with 2 up candles the last 4 days. So watch, pay attention. Remember, the real controlling is the price percent oscillator. If we have more down movement and it spikes over going down more, and perhaps the derivative oscillator starts gaining downward momentum, that would make you feel more comfortable. But of course, looking at that weekly chart, it looks pretty nice as far as the price percent oscillator goes. But again, a lot of sideways sliding. Gold's trying to figure out what to do. And remember, the more range bound it gets, when it does pop, it's going to pop in one direction or the other. So continue to watch. Keep your powder dry. Let the charts lead you. Folks, that's where we are. I do want you to have the training. Do not allow the complexity of charting to scare you away. That's the training. We have it for you. Again, going out to everyone who's signed up for free at chartingwealth.com for our daily reviews. If you haven't purchased our book, you want to support us, please do so. Patreon memberships are available. We so appreciate our Patreon supporters, and we have lots of great free training for you. So join us. And of course, at the beginning of the month, we will be having our live question and answer call-in for even more in-depth training for our Patreon supporters. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.